Okay, Assalamualaikum warahmatullahi wabarakatuh. We are from financial team going to present about financial ratio analysis and compare it between these two companies, which is Ajinomoto Malaysia Berhad and Oriental Food Industries Holdings Berhad. So this is my team, which is Siti Syafiqah, and me JANNAH, AMNI NAWWARAH and SYAZANA. So the contents include all financial ratios, SWOT analysis and summary. So the introduction about Ajinomoto. Ajinomoto was discovered by Kikune Ikeda, a Japanese professor at Tokyo Imperial University who discovered the umami taste. So Ajinomoto is one of the earliest Japanese business to be established in Malaysia. Ajinomoto, also called Ajinomoto Monosodium Glutamate (MSG). This company has launched so many products throughout the years since 1961, and the latest product is called Seri Aji Fritter Seasoned Flour and Banana Fritter Flour. So, Oriental Food Industries Holding Berhad was established as a public limited company in Malaysia on June 8, 1996. According with the Companies Act 1965. So, Oriental Food Industries Holdings Berhad is currently listed on Bursa Malaysia Securities Berhad's main market. So these two companies actually under the same category, which is non-cyclical consumers, food and tobacco. So these are the financial ratios. We have 5 financial ratios, which is profitability ratio, efficiency ratio, liquidity ratio, leverage ratio and market ratio. So for profitability ratio, AMNI will explain further.
So for the profitability ratio for Ajinomoto Malaysia and Oriental Food Industry Holding Berhad, first is the gross profit margin. For the gross profit margin, it is used to measure how much the company earns. For this calculation, we got the Oriental Food to perform well compared to Ajinomoto. Next is the operating profit margin. Operating profit margin is used to measure the earns before the tax expenses and interest expenses are deducted. So for this calculation, we got also the Oriental Food has the highest expenses compared to the Ajinomoto. Next is the net profit margin before tax. The next of net profit margin before tax is looking at the profitability of the company, whether the company is profitable or not, and before the tax and interest is being paid. Also for this one, the Oriental Food performs well compared to the Ajinomoto. Next is the net profit margin after the tax. This profit margin also looking for the profitability of the company, whether the company is perform better or not in the term of the financial after the tax is applied. For this, the Oriental Food Industry and the Ajinomoto Malaysia have the same performance, which is 6% of net profit margin. Next is for the liquidity ratio.
I will present the liquidity ratios for company Oriental Food Industries Holdings Berhad and also Ajinomoto. So liquidity ratios adopting a few ratios that function to ascertain the ability of a company to pay its bills in a timely manner. It is essential for creditors like our company to have these companies' financial situation before lending to them. There are 8 types of ratios presented in the table above, which is practicing a similar concept of comparing liquid assets to short-term liabilities. The current ratio measures the amount of a firm's liquidity by comparing its liquidity assets to its liquid liability. This ratio includes inventory, which is not particularly liquid and can thus misrepresent a company's liquidity. Therefore, we use We also calculate the acid test ratio or the quick ratio, which is a more stringent version of a current ratio, which it measures the ratio of current assets, excluding inventory, to the current liabilities. Inventory turnover is the length of time that elapses between the day or a firm purchases an item to the day it is sold. High value of inventory turnover ratio indicates the firm is selling their inventories fastest. Stock turnover days measure the mean time a firm can turn its inventory, including goods that are a work in progress, into sales. Accounts receivable turnover ratio is used to measure how efficiently a firm is in collecting debt and extending credit. While account receivable turnover days calculated the average number of days it takes for the customers to pay their debt. Account payable turnover ratios measures the efficiency of a firm in making payments to creditors and suppliers that extend lines of credit. Account payables turnover days, on the other side, depicted the average number of days that an amount due to a creditor remains unpaid by a firm. As depicted here, comparing both companies, Oriental Food Industries Holdings Berhad and Ajinomoto Malaysia, for current ratio, Oriental Food has more ability to pay its debt compared to Ajinomoto, as Oriental Food recorded 7.0467 times current asset to offset its liabilities, while Ajinomoto recorded lower with 1.7627 times current asset to offset its liabilities. For quick ratio, Oriental Food recorded 5.0151 times compared to Ajinomoto with 1.18, which shows that Oriental Food will be more at ease to offset its liabilities. Ajinomoto Malaysia also recorded 3.5260 times inventory turnover ratio, which shows that Oriental Food is selling its inventories faster than Ajinomoto Malaysia when it's recorded 6.8501 times per year. Through stock turnover days, Ajinomoto Malaysia recorded higher value with 103.5160 days, while Oriental Food recorded lower value with 53.2841 days, depicting that Oriental Food is at an advantage as it took shorter time to clear off its inventories compared to Ajinomoto Malaysia. Ajinomoto Malaysia also recorded higher account receivables turnover ratio value with 7.1383 times and lower average number of days with 51.1326 days. Meanwhile, Oriental Food recorded lower ratio value with 6.1148 times and higher average number of days with 59.6908 days. Siti conclude here, Ajinomoto Malaysia is more efficient in collecting debt and extending credit compared to Oriental Food, as it took shorter average number of days. Oriental Food lastly recorded higher ratio value with higher account payables turnover ratio value with 11.5388 times and lower average number of days with 31.6324 days compared to Ajinomoto Malaysia, which recorded 7.3165 times and higher average number of days with 49.8899 days. Simply conclude here, Oriental Food is more efficient in making payments to creditors and suppliers, as it took about 11 times a year to make payments, with only about 31 days due amount to creditor remains unpaid by Oriental Food, compared to Ajinomoto, who took only 7 times per year to make payment to creditors and suppliers, and about 49 days due amount to creditor remains unpaid by Ajinomoto Malaysia. Next, we will look at the leverage ratio.
So, a leverage ratio is any financial ratio that compares the amount of debt incurred by a company to other accounts on its balance sheet, income statement, or cash flow statement. So, these ratios indicates of how many companies' assets and business operations are financed. So, types of leverage ratios include debt ratio and interest cover ratio. So, firstly, debt ratios are a ratio that include total debt and total assets. So it can be used to evaluate a company's ability to service its debts. So from the table above, it shows that Oriental Food have lower debt ratio than Ajinomoto, which is 0.216, and Ajinomoto is 0.533. So from a pure REITs perspective, debt ratios that are 0.2 or lower than that are considered better, while a ratio of 0.5 or higher makes the company more difficult to borrow money. So a low debt ratio suggests a better creditworthiness, and a higher debt shows a high risk. Furthermore, for another variant for debt ratio, which is we calculate debt ratio by dividend of total long-term borrowings with total equity, show the same results, that Oriental Food have lower debt ratio than Ajinomoto, which is 0.082 for Oriental Food and 0.64 for Ajinomoto. So this show that Oriental Food has better performance in handling debt than Ajinomoto. Besides that, the interest cover ratio. The interest cover ratio is a profitability ratio that measures the amount of money a company is required to borrow to pay its debts. So higher cover ratios are better, because a higher interest cover ratio indicates that there is sufficient profit to pay off the debt. So from the table, Oriental Food has a higher interest cover ratio than Ajinomoto with 53.5. So the Oriental Food has more sufficient profit to cover the debt than Ajinomoto. So next is efficiency ratio.
The next one is efficiency ratio. Next. This is the total formula. Under this ratio, we have EPS, earning per share, ROE, return on equity, ROA, return on asset, ROCE, return on capital employed, and the last one, we have return on average equity, ROAE. This next. This is the value we get from the calculation based on the formula before. So the EPS for Ajinomoto is 2,743.53 cents, and Oriental Food have 6.95 cents. ROCE for Ajinomoto is 301.127%. Oriental Food, we have 7.3639%. For ROA, Ajinomoto have 151.2613%, and Oriental Food have 6.9328%. ROE for Ajinomoto, we have 324.1745%, and Oriental Food 8.8423%. And the last one is return on ordinary equity. Ajinomoto 324.1745%, and Oriental Food 8.8423%. Next slide. Efficiency ratio are regarded by the financial analysis as a crucial indicator of an organization's recent and short-term performance. This ratio can be used to compute the efficiency ratio such as earning per share, return on capital employed, return on asset, return on equity, and return on ordinary equity. So ROA, also known as a type of return on investment ROI indicator, gauges as a company profitability in relation to its total asset. So by comparing the both company earnings, known as net income, to the capital it has invested in asset, this ratio shows how the both business is doing well. The return on equity is measure of a company annual return, known as profit after taxation, is divided by the value of its total shareholder equity. The ROCE is to assume as a better tool for assessing capital efficiency. So the ROE will increase the balance sheet, acquires more leverage, and derived is largely resistant to changes in the capital structure of the company. To relate ROE and ROCE together in the financial performance and capital efficiency of the stock, so we have to look on two conditions. The first one is ROCE is larger than ROE. The company, that means the company has a good opportunity for having a little or no debt at all on its balance sheet. So this is for the company Ajinomoto because it has ROCE higher than ROE. If the value ROE higher than ROCE, it means the balance sheet of the company is leveraged. This is for Oriental Food Holding. Next one is market ratio by Syafiqah.
So for market ratio, the market value ratio is used to evaluate the current share price of the shares of a public company. So this ratio is based on the market price of a firm's share. So the example of market ratios are PE ratio and market to book ratio. The PE ratio is commonly used to evaluate a company's stock price relative to its annual earnings. So the PE ratio is actually helps to determine if a stock is overvalued or undervalued. So a high PE can mean that a company's price is overvalued, and a low PE can mean that a company's price is undervalued. So from the table, it shows that Ajinomoto has better PE ratio than Oriental Food, which are 22.35. So this means that Ajinomoto may has higher earning growth in the future compared to the Oriental Food. Besides, the market to book ratio is commonly used to evaluate a company's value. So it shows the book's historical and current market value. It means that market to book ratio shows how much the market value of a company is relative to its actual worth. So the lower a company's price to book ratio is, the better a value it generally. So from the table, it shows that Oriental Food have better book to market ratio because lower than Ajinomoto, which is 1.03. So Ajinomoto doesn't have a good ratio because they are higher in market to book ratio. Thus, Oriental Food is valuing the company's equity cheaply compared to its book value compared Ajinomoto. So next is SWOT analysis.
For the SWOT analysis, for Ajinomoto, the strength is the Ajinomoto has a higher profit margin. This Ajinomoto has a higher profit margin in the industry compared to any other competitors. Next is the recognized by Ajinomoto is recognized by many people. As we know, Ajinomoto is recognized by many people in this country because of the popularity and the how often people use the Ajinomoto. Next is Ajinomoto has many loyal customers. If the product has many loyal customers, the product will become successful. Next is the skilled staff. Ajinomoto company have a skilled staff which can lead the company to perform well in the future. Next, Ajinomoto have a huge dealer and associate network that not only help in providing consumer with efficient service, but also help in handling competitive issue in chemical manufacturing business. For the weakness of Ajinomoto, this company only grows the company but not the business. Next, Ajinomoto is easily copied by other companies. This can make this company's product, they have a higher number of competitors. Next is the high turnover worker for lower level but not the professional level. This is particularly concerned about the high turnover of worker at lower level. This is because to keep the talent within the company, it might result in greater wages. Next is the effectiveness of customer network. The effectiveness of customer network that Ajinomoto built is weakening. This is because the local monopolies and niche market that business as Ajinomoto in Malaysia who take advantage of starting the local monopolies of this market. That business as Ajinomoto Malaysia could take advantage of are starting to disappear. Next is for the opportunity. Ajinomoto have opportunity to be more Ajinomoto good will be consumed. This is because low rate of inflation increase market stability and market credit available to Ajinomoto Malaysia consumer at cheaper interest rates. Next is the preference of people towards food that are frequently changing. This opportunity lead to Ajinomoto to be recognizable since this company also focus on chemical manufacturing industry and basic material sector. Next is unorganized competition. Unorganized competition finding it challenging to operate in chemical manufacturing sector because the government is raising the requirement of business. This may give the Ajinomoto become more grow compared to their competitors. Next is for the threat for Ajinomoto. It should with qualified human resource due to high employee turnover rate and growing reliance on innovative solution. For this, the company of Ajinomoto soon issued with qualified human resource due to high employee turnover rate and growing reliance on innovative solution. And next, Ajinomoto Malaysia is unable to efficiently address the demand of specific market competitors are concentrating on due to the size of client base. Next, for the oriental food.
So analysis for Oriental Food Industry Holding Berhad as a strategic management tool to evaluate its current internal strengths and weaknesses as well as identify opportunities and threats in the macro environment such as technology, environment, politics, economy, social and demography. So there are objectives under this SWOT analysis that are Oriental Food want to achieve. The first one is Oriental Food Industry Strategic Planning. The second one is improving Oriental Food Industry Business Portfolio Management. The third one is evaluating the new initiative viability in Malaysia. And the fourth one, making a business choice that is relevant to the food processing sector. The fifth one, establish objective for the business and Oriental food industry organizational reorganization. For the strength, this company has a big impact on the food processing industry in Malaysia. Food Oriental is also known as company that produce many innovators. this company product can attract loyal customer and new customer, especially young generation. And this company also has wide recognition in Malaysia. So the weakness they have is lacking of marketing oriented approach compared to the product oriented approach which make their product less advertised. This company also borrow a big amount of money from the capital market. And the last one is the money offers nearly the same product in the marketplace, which can lead to the customer decline. The opportunities that the company can take is this company can create new process and procedure in the food processing industry. Also, with the new 5G ability in the technology, this company can expand their company by using these tools for the reach their customer. They can identify the target audience, marketing plan, and sales strategy faster than other competitors because this company have been putting so much effort in using analytical service throughout the year. So Analytical Food can reach the global audience to promote their product by using Bitcoin, since Bitcoin has become popular these days. And the last one is trade. As we know, the COVID-19 pandemic caused the uncertainty in household growth and might increase the social security cost, cause people to save more money and decrease demand for goods and service. So it's in fact to this company. After COVID-19, particularly in position requiring interaction with the people, earnings have increased significantly. The margin of oriented food industry may be under strain as a result of rising wages. In the US, there are more than 1.5 million new business application due to the increased competition. Oriented food also may see the lower profit in the food processing industry. The next one is summary.
So as a summary, it is analyzed that Oriental Food Industries Holdings financial situation is at more favorable compared to Ajinomoto Malaysia, as it benefits more through comparison of profitability ratio, liquidity ratio, leverage ratio, efficiency ratio, and also lastly the market ratio. Results show that Oriental Food Industry Holdings Berhad is favorable in 14 categories of financial ratios compared to Ajinomoto, which only favorable in 7 categories of financial ratios. Therefore, following the results and the SWOT analysis, we strongly suggest the Board of Directors to choose Oriental Food Industries Holdings Berhad to invest in. That's all from us. Thank you.